I've been helping fund developers for the last 10 years, and in today's video we're going to be talking about alternative and creative ways to fund your development projects. The traditional route is you go to a development financer, a bank, in order to finance your loan. But what happens if all of them say no, but you still think your deal is viable? In some cases, it might be better for you than development specialist funders or banks. I could come up with 10 different alternatives to your traditional funding. And the first one is joint ventures. That means partnering with other developers or with the landowner. That way you both share the costs and the profits. Here's an example of how that could look. I own a plot of land and I don't know what to do with it. Along comes developer ABC Limited. So they come to you and say, oh, I see you've got this plot of land. We have finance cash available to develop the land, but we just haven't been able to find the right site for us to develop on. If we say to you, how about we joint venture with you as the owner of that land, we will go get planning permission and then build on that site with you. And then once we sell the property, we will split our profits with you. It's a little bit more complicated than that. You need joint venture agreements. You could be on either side of that story and it will work. Then there's seller financing. So let's say, for example, again, we're that ABC Development Limited. We are looking to purchase plot of land, but we just don't have the money. The landowner owns the land outright. They're not in any rush to sell it, but you can offer them a deal in which they actually finance the property for you. So you'll say to them, let's say it's worth 100,000. You'll say to them, well, I'll pay you 100,000 over X amount of years or when the property is done. The seller financing allows the property seller to act as the lender in the situation. So instead of a bank loan, the buyer pays the seller in installments, in one lump sum, whatever the agreement is. This is useful when the developer has difficulty securing traditional finance, and then it offers a flexible payment and generally some decent interest terms too. Then you've got lease options. This allows the developer to lease the property with the option to then buy it at a later stage. This strategy requires less upfront cash and provides you control over the property whilst raising the funding for an eventual purchase. It's a great option for developers looking to develop the site over a longer period of time without that initial investment. Then you've got crowdfunding. Real estate crowdfunding allows developers to raise money from small number of investors through online platforms. They can be really good ways to finance projects without relying on the traditional banks. You present the project to potential backers and then offer them a return. Normally the platforms will set that return that they'll be getting and then they'll take a small margin. Then there's mezzanine finance. This is a hybrid of debt and equity finance typically. Often it's used to fund the gap between what the senior lender, so the main bank, will be able to provide and the total cost of the project. So let's say it's 100,000. Well, typically it's only on larger projects that you'll be looking to do mezzanine finance, but for easy numbers we'll go 100,000 is the total cost, but you can only get 70. They'll hopefully be able to fund the 30,000 difference. Lenders usually charge higher interest rate for this, but it does allow more flexibility for the repayments, and often they will take a stake in the project and do a profit share, which keeps the rates down. Governments often provide grants, tax incentives, subsidies for property developers, especially for affordable houses or urban regeneration projects. The funds don't need to be repaid always either, but securing them requires you to meet very specific upfront criteria, and navigating the bureaucratic process can be a real pain, but it is well worth it if you can do it, especially if you're looking to build in regeneration areas. If you want to have a look at government grants and subsidies, they change all the time, so it's well worth just literally Googling it. They come up straight away. Normally either the local council will have some or the .gov websites. The eighth option, and probably the one we see the most commonly from our point of view, is called land option agreements. This is where the developer purchases the right to buy a property at a later date. This is incredibly useful for two reasons. One of them, you find a plot of land you really like and it doesn't have planning permission. You can approach that landowner and say to them, we want to purchase this land, but we will only do so on the basis that we can get planning permission. That way you can then buy the option to purchase that land, which means no one else can step in. It's obviously a good thing if you're then going to go and spend some money on the site, i.e. getting the planning permission. You'll then be able to go back and purchase that land for the agreed price on the option agreement. Typically, the option agreement will cost you some money up front, so there is an inherent risk to that, but most of the time you'll be able to get a much better deal. Then there's private money lenders. Private money lenders are individuals, non-traditional institutions, family offices that provide fundings outside of the banks. They typically offer quicker approvals and are more flexible, but they do come with as you'd expect, higher interest rates. It's a good option for developers needing fast cash and generally for a short period of time. If you are looking to do larger projects, one of the easiest ones to get into is actually partner with your local authority. So this is the council. They often will have specific things they need to do, specific targets that they have to meet housing needs. And as part of that, they will go out to third parties such as yourself in order to hit those specific targets. They could actually offer you the land completely for free if you build it all for them, and then they will guarantee you a said price on the back end. There's all sorts of options, and it is well worth having a chat with local authorities and see what they have on offer. This, as I mentioned, is largely for bigger developers, so if you're just starting up, it's probably not one for you. Hopefully this has helped you out. If you know anyone that could find this useful, do share with them, and thanks for watching.